Hey, hi everyone. Welcome back to another episode of Finance Village, the podcast where financial professionals explore deeper collaboration, better client engagement, smarter tools that we can transform the way that we deliver advice, and tackle some of the popular and controversial issues of current times in our industry. Today's episode is certainly um, more than money. It's about connection. It's about a time of economic pressure, digital overload, fragmented information, traditional advice losing its edge a little bit if we don't kind of keep up with some new ways and expectations. And clients are consuming content, financial content from social media influencers, turning to AI for planning shortcuts and trying to coordinate financial decisions across generations and relationships in our household without necessarily all of the tools that we and kind of methods that we'd like to have in place in a perfect world for these things. Financial professionals are feeling this as well, and we're disconnected from each other and our clients' evolving needs sometimes, and sometimes from that full picture of what's really happening in the households and how well that information is being transcribed across typically what we do is focusing on one person. And this episode is focused on kind of one big shift of moving from siloed to synced and covering all of those nuances of those topics around it, both across professional disciplines, but also syncing with clients at a human level, syncing within the households and between partners, between parents and children. And joining us today is Saijal Patel, CFA, a financial strategist, educator, former CNBC Asia and BNN Bloomberg anchor, and the founder of Saijal. Am I pronouncing that correctly?
Saijal,
Saijal, okay, thank you.
close enough.
Uh, Saijal brings more than 25 years of experience in wealth strategy, investor education, and inclusive client engagement through her financial wellness platform that we'll make sure to pump at the end of the podcast, and the Strictly Money podcast, which you should all go follow. She helps firms and individuals bridge gaps between financial knowledge, emotional readiness, long term decision making, and really puts a really great focus on empowering women within that, which has been a gap and still continues to be a gap that she's being a leader in closing. So, thank you for joining us. And we'll kind of start off with, where do you see some of those core issues? There's many different issues of siloed
Mhm.
experiences, whether it's just getting the information from the accountant to write everything off and then eventually talking to the mortgage broker, then trying to get a mortgage on a $10,000 income, or it's, those relationships in the household. Give us kind of an overview of what you've personally seen standing out the most in some of those opportunities and getting people synced up.
Yeah, sure. First of all, Sheldon, thanks for inviting me to this podcast. I think this is such an important topic and a very timely topic, especially because I think a lot of the financial industry continues to be siloed, right? I tend to use the word functional advice, we've talked about this in the industry quite a bit, where the functional advice tends to be, very transactional. It's where the advisor just focuses on that one a piece of someone's money management, as you alluded to, and it's typically investing. They don't know much about that person's goals or sometimes even risk tolerance. They don't usually talk to them very often, and it's still prevalent. I hate to say it, but, I was looking at data and it shows that 50% of advice is actually functional advice, which is still ironic, I think, in today's day. You're still seeing very little of that sort of comprehensive, holistic approach to financial planning.
And you mean more transactional by functional,
Yeah, yeah, I
or
think
just
it.
maybe a moment in time concern?
No, I think it's more it feels more transactional, and look, they've been able to get away with this for a long time, especially when you think about where that advice lands. It's typically related to investing. If you go to, say, a bank, um, they can get away with it because everyone banks. Banks are everywhere, right? you have someone walking in and they're like, "Look, I wanna put I wanna open an RSP account." What does the salesperson do? Pick a couple of funds and stick them in. And people aren't the wiser because we have such a high level of financial illiteracy. Um, I would say it works also because, Sheldon, where do we focus most of our energy, even in the media? It's investing, right? That's the
Yeah,
sexy piece.
100%, 100%.
Look at what I did. I mean, I was an anchor at CNBC and Bloomberg. That's all about capital markets. So that's where people typically focus their energy on, and they think, and unfortunately, it's a mistake, is they think that that's pretty much all they need to focus on.
That's the whole financial planning world.
Yeah. Yeah. Look, I have women, as I focus on women. I have women in my course. I've actually built a holistic sort of financial education course. And the number one comment that I get from women is, Sage, I'm afraid to invest. I'm like, why? Well, I'm afraid to lose all my money. I go, you're not going to lose your money in the market unless you're like, you know,
Presumably, if you lose, everybody loses.
Yeah, yeah, it
If you're
depends if
in
it's
the right.
going to 0 or pretty much 0. Where you're gonna lose your money is when life happens, and nobody thinks about that, and life is gonna happen. You're going to be widowed or divorced or laid off or, face a critical illness, like, these things happen, and that's where people lose the money, which is why I go back to the financial planning piece. That's the piece that's so important.
Well, and just to touch on that real quick. So, as far as financial literacy, I've said this stat, I'm sure, on before, but I'll mention it again. Of the G20 countries, the average score is 48% out of 100, and that's on super basic
Yeah.
questions. And I would submit to you that even a lot of people that work in banking still believe that investing kind of is that, that just that one thing that you need to make sure to do. But
Mhm.
and even in the banks, they have a lot of people there in a lot of different departments, but the incentivization, they've been struggling with cross collaboration and cross referrals for well over a decade. And it's been a big conversation there. And they're not really always sure what to do with it. But in the independent space, I've always found that kind of everybody's really focused on their own thing. And early in, because I've, been able to be watching, wonderful voices like yourself and Jason Pereira and other people on LinkedIn early in my career, I did really make it urgent to do kind of two major takeaways. Was one, let me not just process a transaction and then hope that this works. I wanted to make sure that whoever they're talking to is in the loop, give them a nice kind of formal update afterwards. Some appreciated it. Some, I guess it was like, they didn't expect it and didn't know what to do with it. And then making sure that the spouse is included and copied on all the emails, even if they're not engaged in the conversations,
Yeah,
which you want to try to prompt, make sure that they're copied on everything.
so important.
Uh,
When
but
I
I mean,
started, I'll make a couple of points. When you go back and you mentioned the financial literacy score, what concerns me there, and not that we shouldn't have that, is, again, that's only one piece of it, right? Just because you might have knowledge on what compounding is or, how interest rates work, that doesn't mean you're going to be financially well. Like, you actually have to do something about it. And again, even that approach is so siloed, um, that we tend to. I mean, it's a great starting point. You can talk about the fact that people are not financially illiterate, but 5 questions or 10 questions doesn't give you a full picture. That's the first point I would make. The other point that you mentioned about engaging, with women, that's the part that I spend all my time. Yeah. I started in the industry aging myself, but this is like 95, and working with the brokers, and it was rare. It wasn't. Yeah, it was. I would say it was rare that I would see a lot of women come into those meetings. And I remember asking, like, where are the women? Where are the spouses? And
well,
I
I'm going
had
to make
a
a
lot
controversial
of engagement.
statement about that, and
Yeah.
and I might be offside. I've been in the industry for 20 years, but I would say that maybe there's a little bit of a trend that when the woman is the one that's managing the money in the household, kind of CFO wise, the man has begged and been super happy for that to happen. Where when the man is the one doing it, it's one has been given and I think one has been taken. Does that make
Mhm.
sense? The
Yeah.
man has taken that role because he wants to do it and he's proclaimed himself as CFO. Where often when they're married and the woman's doing it, the man has begged the woman to do that and he's really good with kind of just being copied
Yeah.
because he wants to. And I might be wrong, and I'm not saying it's
That's an
massive, but I
interesting
feel
thought.
like it's a little bit that's kind of there's something there that I've experienced personally.
Yeah, well, when I ask the women, "Why aren't you engaged?" They usually say, "Well, I don't have time," or, "Yeah, but my husband wants to do it. He says he's better at it." I'm like, "How do you know he's better at it?" Because I'm gonna tell you, he's probably not better at it. He's muddling through, and even if you wanna delegate to your partner, do you actually know what's going on? They usually don't, and I just test them. I'll say, "Okay, so what are you invested in?" I don't know. I think I have something in RSPs. It's not good. How much debt do you have? What's your net worth? Don't know. And the
That's
problem
crazy
with
how
it,
many people have no clue what their net worth is.
yeah, a lot of people don't. And then look, I have a lot of women who are separated or divorced that come into the program, and I hate to say it, but they usually tell me they had a nasty surprise. You know, like, I had no idea my husband was invested in this or that we were in this much debt. I mean, I'm going to say 7 out of 10 times that happens. Um, and so I really try to encourage women to get involved. But I'll tell you, Sheldon, the other piece is I've talked to a lot of men who say, I can't get my wife engaged. I keep telling her, you need to learn this stuff, and I can't. And I'll say something about the financial industry because I think some advisors get a really bad rap, or the industry does in general. Now, there are some advisors who just, they'd rather deal with the husband and they can be a bit chauvinistic, but a lot of times it's not their fault. If the woman is not willing to come to those meetings, I'm not sure what the advisor can do, right? And that's where I come in, and I really do um, encourage them. We had a cohort earlier this year, and they all had advisors because I'm working with a bank on this who've sponsored 50 women into my program.
Oh,
So
wow,
knew
cool.
they all had advisors, and one in particular, she was recently widowed, and she said, Sage, I feel completely overwhelmed. So I was guiding her through the course, which she was getting, like she was switched on enough to understand it. And I said, okay, so what's your concern? Well, my husband did all the investing and they were risky because he was comfortable with risk. And I said, well, are you? And she's like, no. And I go, okay.
Oh,
Have you
geez,
talked?
that never even occurred to me, sadly, until you just said that.
Yeah. Yeah.
We don't when we get married, our risk tolerance is not automatically, majestically synchronized by the heavens.
Yeah. No. And so I did say to her, okay, so have you sat down with your advisor? No. Well, how come? You know? So I walked her through. I walked her through, here's the questions you're going to ask her. I think it was a female advisor. This is what you're going to ask her. And here's what they're going to, like, this is their job, but they were so afraid to get engaged with the industry. And often because they don't want to look stupid, but also, it doesn't matter if the advisor says one thing and another advisor says another. Sheldon, the problem is they can't discern between the two pieces of advice, right? And I remember having this meeting.
That's a really interesting point.
Yeah, well, I had a meeting with a
And
room
they
full.
could both be good versions of advice, it's just a
Oh, right.
preference,
That's
or they could be
that's
different quality as well. But yeah, if you can't discern, well, how the heck do
that's
you
the
do that?
problem. I was in a meeting with a room full of executives. This is DBS Bank in Singapore, and they were trying to understand, my model, my business model. And I said to them, I go, Your problem, you think your problem is that the clients don't trust the financial industry. And yes, it's a problem. You just have to look at your net promoter score. I go, But that's not your bigger problem. And they're like, What? I go, Your problem is they don't trust themselves. They have no idea. You can tell them things, but they don't even know enough to say, does that make sense for me or that doesn't? So they
And that's a
completely
lot of the time
disengage.
why they don't want to attend the meeting because they feel so overwhelmed by it.
Yeah. Yeah.
Let's jump
Now
into
you
that
know
a
the
little bit
problem I'm
more.
trying to solve.
Yeah, and you're adding a lot of nuance that like and it's, I'm not gonna feel guilty for because like, I grew up mortgage side and big bank kind of day-to-day banking. I have really tried to enthrall myself in the holistic and the collaborative conversations, but it's amazing the nuance that you can kind of forget is so important. And I wonder, a few things I want to touch on here is, with these AI note takers that we have, can we then as clients more helpfully take away those great conversations and now put that recorded conversation into ChatGPT as a
Yeah.
transcript and interact with it to ask questions that feels less burdensome with the advisor to get clarity to go back and whatever on our own time? Is it a natural state of because men and women are different. They've got books about Mars and Venus, and there are certain things that
Well,
are different. I might be wrong about this. My guess, and I feel like certainly it's the case in our relationship with my lovely wife. I would guess that men are a little bit more prone to risk, to being comfortable with more risk, and women a little bit more conservative. If there was a general thing, I don't know if that is the thing between men and women. So I'm curious of your thoughts on that. And
yeah.
then sometimes you just want to get it done because if I'm honest, to show some love and empathy to advisors that aren't achieving it as much as they'd like, um, because we have an extent of empathy for the client side. Sometimes if this couple really needs to do some financial planning, like I got
Mhm.
a client right now that I just refinanced for a mortgage, and I'm like, I do not want to just. We've refinanced as much debt as we could, but I do not just want to leave them to be like, okay, I refinanced your debt. Good luck not screwing it up again. I want to give them a path forward. And if I can only get one of the two to engage somebody, that's better than none.
Yeah. Yeah. Um, the risk conversation is always interesting, and this actually comes up quite a bit, and I talk a lot about it in my program. I think women are more risk aware, meaning that if you give them more data points, they're willing to take the risk. Whereas I have found guys just tend to jump in. They're like, "Oh yeah, yeah, yeah. Oh, I'm gonna make what? Okay, yeah, done." you
Well,
know?
that's different than a matter of risk
Mhm.
adverse versus risk willing.
Yeah,
It's the care taking to assess the risk.
yeah, and if say women don't have a lot of wealth to begin with, or you're dealing with someone who say is more, I don't know, paycheck to paycheck, for example, they're not going to want to take the risk, right? They're afraid of losing what they have already. Um, but the conversation that I tend to have with women is I talk about risk, risk tolerance, and risk capacity. There's a difference, right? So
I'm
you
just
can
going to ask you
have,
for it.
yeah, so you can have a low risk tolerance, but if you are at risk of not meeting your goals, then you need to look at your risk capacity. And vice versa. You may have a very high risk tolerance and say, yeah, you know what? I can sleep at night if the market goes down. Yeah, but if you need that cash in the next 6 months, then your capacity is low. And it's a
There's a lot of
delicate
different
balance
ways to
between the
look at
two.
what you're saying. It's firing in every direction, even like
Yeah.
the risk of opportunity cost of inaction.
Yeah. Which I talk about as well, right? The risk of you not doing anything is greater than you doing something. Um, and you have to talk about that. So they get it. They get it. But I always say it's a balance. And just because you say you got a high risk tolerance today doesn't mean that that won't change in a couple of years time, right? And this is why when I walk women through the program, we work on the goal setting first. Like, what is it that you want in your life? Then I talk about the financial planning piece. And what I get them to understand is that, All financial planning is, it's like you are the CEO of your life. You got resources, whether it's your income or savings. And the goal of that is just to maximize it so you can achieve the things you want. That's what financial planning is, right? And how do you maximize that? It's not just investing. One, you got to save, you got to minimize debt, you got to think about tax planning so you keep more. You got to think about protection. So, something doesn't happen and then all of a sudden you're forking up this money that you didn't expect to fork out. You got to think about legacy. They get that. So, um, this is why, again, such a big believer in holistic planning because I just can't imagine doing it any other way.
So how do you engage in holistic planning? Do you have clear go-tos? Like sometimes people are, I mean, people can be registered in different provinces and set up kind of separate I mean, everybody's working remote now. Like what what do you see as the methods of working collaboratively and holistically?
Yeah. Well, I mean, I'm an educator, so I don't provide advice. I'm not licensed anymore to do that.
As
Although,
far as recommendations
yeah,
for who know about the industry.
yeah. I typically don't. I have a list of people that I would say, here are a couple people that you may want to talk to. I'm careful in how I do that just because I've never audited them. And the
Gotta
way
be
I,
careful who you stick your name on for sure.
yeah, but the
You
way,
are about the philosophy, I guess, making sure that they understand the philosophy of it.
right. And so, there's an actual course. How do you engage with the industry? Here's a list of questions when you go and interview advisors. Here's the things you want to ask them. And here's the thing, an advisor or a certain firm may not meet all your needs, right? They may just do financial planning and not the investing piece, or they may do the investing piece and they don't have someone doing the tax part. Now, when I was at Asante way back in the day, it was very holistic. There was a financial planning. There was obviously there was the lowering ward. They had the investment side. I worked with estate planners, tax lawyers. It was very holistic, but not all firms are set up that way. So you have to know enough to make sure your needs are getting met. And you can say, look, based on the fees I'm paying or what I need, this financial firm is enough. But now I know I need to go to get a lawyer or a tax planner. And I think this is where you're going, and correct me if I'm wrong, is going back to the siloed part. That's where the challenge comes in. If one hand is not talking to the other. And, for example, um, how many times have you seen, because I see this all the time, it's like, oh, I need a will done. Okay, I've talked to my lawyer. Okay, great. Do you know if whatever your wishes are, do you know if it's executable? Like, you need a financial planner to be able to look at, oh, you want your three kids to have the cottage? The lawyer doesn't care. He or she's going to put that in the will. But can you actually execute on it? Very
I
different,
don't think
right?
that's ever occurred but I mean, I was even passing out free wills from Willful, which is like a better than nothing will to mortgage customers, but the fact of obviously, because I say go pay for a lawyer when you can afford it, but if you have nothing, take this and get better
Mhm.
than nothing. But that's interesting is it executable? Because I don't think that occurs to most of
It
us.
doesn't, and this is the
We assume
problem.
that it's
As much as
executable. We wrote it in the words.
Yeah, look, 50% of Canadians don't have a will, but even those who do, how many of them get into trouble because, they can't actually do what they wanted in the will? Um,
Oh, that's very interesting.
yeah,
You
so you
definitely have
actually
me
need the
looking at my
financial
will as a
planner.
result of that one statement.
Yeah, yeah, and we see this, this is where, like, insurance comes in or, do you need a trust? So the parties have to be able to talk to each other to make sure that those needs are being met.
Well, let me ask you this, because I obviously did a lot of research before the episode, and one of the things I saw is that women are supposedly either more liked by the parents, or I don't know where the stat kind of calculates from, but they're set to inherit rather us over 70% of intergenerational wealth, and we're in front of one of the greatest wealth
Yeah.
transfers ever. So, besides the risk of besides the business risk of not having been talking to all of the people in the household, but also the business risk, almost to an extent from a compliance extent. Like, what does the business risk look like for advisors that aren't paying attention to stats like that?
I think huge. I think huge. If they're not engaging with, in this case, say women, because women typically outlive men, and like you said, the last stat I looked at is they're going to inherit about there's going to be $1 trillion changing hands by the time 2030 hits. Everything I do, Sheldon, though, is telling me is just so much harder for women to build wealth, and a lot of it is not a lot. I'm going to say there are systemic biases, right?
So you're saying it's
What's that?
karma that's making it happen then?
Yeah, karma, yeah. Well, thank God you're
No.
doing what you do, so she's gonna have a good role model, hopefully, right?
Yes.
And build the wealth, but yeah, going back to the generational wealth, I think it is gonna be a huge risk. And advisors have to figure out a way of, engaging, or, making sure that they're coming to the meeting, because what typically happens is, one, they're gonna be so overwhelmed with this money. If they've never managed money before, try managing it when you're, 80, 90, in grief and learning for the first time, and maybe your memory's going a little bit too. So who are the people you're gonna go to? You're gonna ask your kids, who do you deal with? Or your best friend? Because we know people take advice from family and friends more than they'll actually take advice from professionals.
And why? Why? One word that makes the world go round.
I don't
That has
know.
been the focus of my whole
Oh,
trust.
tell me. Yeah, trust.
Trust. I
Except
don't
they
care
shouldn't
how
be
much you know
trusting
if
these
I don't
people.
trust you. This is
That's
what we
the
based
problem.
my roommate, business partner, spouse, everything. I want competence. But
Yeah,
before I'll chance to even tell me about your competence, I have to trust any word that comes out of your mouth.
which
And
is
I've learned that
scary
the
though,
hard way a
Sheldon,
couple times myself, and I'm glad.
but it is scary. It's scary because, chances are that person doesn't know much either, and yet
I
they're
know, that's why
listening.
it sucks, because they have all our trust, but they have like 48% financial literacy on basic questions.
Goes back to the earlier point, they don't trust themselves. They can't discern between good or bad advice, right? And it comes back to financial literacy. But that's what's gonna happen. And I get it. I get women coming to me all the time saying, "Do you know of a good female advisor?" And I always ask them. I said, "Why female?" "Oh, well, I've been told that they're gonna be better." I go, "Well, maybe, not necessarily." Now there's a lot of great male advisors out there. But I ask them because it's like it's the default thing, right? The messages out there, they've already been telling them that don't trust the male advisor, or don't, you know, yeah, the females are better. My point is, yes, the female might be more relatable and they may relate more to your situation. Doesn't mean that they're going to be better. Got to do
I
your
guess it's
homework.
like many of the things in finance is the two most important words is it depends.
Yeah. I
It
say it
depends.
more often than I'd like to say it, but it's true.
But you have to really give that proper advice. And I'm glad you kind of transitioned seamlessly there into the next thing I kind of want to touch on is about kind of the aging parents. And I'm seeing a lot of advisors that I'm having conversations with looking for ways and technologies to kind of carefully help the kids, help their parents kind of get at least familiar a little bit. Even if you're not getting familiar with their financial picture, you're at least getting familiar with their financial professionals
Yeah.
to an extent. But like there is opportunity there, both upwards and downwards. The kids, educating the kids early, and then with the parents. And we think about those. When I think of people most special in my life, I always default to grandparents. I'm sure that is for a lot of people the same way it is for, we think of grandparents and kids. The people that we like have the greatest sentimental attachment to in our family other than our spouses. What do you see that dynamic looking like as far as how we can sync Like, is there utility in us trying to do that? I mean, I know that advisors want to capture the generations for business purposes,
Yeah.
but there's also there's tangible and intangible. And one thing I
Mm,
wanted to mention right here is sometimes people are only doing the holistic thing when they can do the cute little referral fee and get some compensation, where there's like a whole separate conversation to be had in that. That's a tangible. But you have to understand that if you are looking after the collaborative, holistic view of your client and trying to make sure to connect them with people instead of this standoffish attitude that we have in the financial industry sometimes, where it's like, oh, you're talking to an insurance advisor, I'm an investment advisor, you could have just
yeah.
asked me. There's this weird standoffishness is, you know there's an intangible value, even though it may not be compensation, of stickiness and your client building that trust for you and feeling like you've bridged a gap to a next level of conversation. And I take a lot of pride of that as a mortgage broker. When I'm done with the mortgage, I don't just go and do my thing. I say, okay, what depending on, sometimes it's a cash flow thing. Sometimes I've kind of got some nuance from conversations. I don't proclaim to be the specialist. I'm just like, who can I get you to talk to next? Who would you feel comfortable? Offensive on investments, defensive on insurance. But let's continue your conversation. This is a big purchase you just bought,
Yeah.
and they're always buying to the max of what they can afford. So, like,
Sheldon, they're gonna
what do you
value that. They're gonna value the fact that you're looking at their picture holistically and you say, "I'm not the specialist in this area, but here's a couple of people that you can talk to."
And it's a lot better than just going into that what is prevalent on the mortgage side, which is just, well, let me offer you this half-ass creditor insurance at the bank, or just try to offer whatever this insurance is going to pay me in additional revenue. I don't even want to have that conversation. That's not my specialty. I know compliance wise I can, and I do want to mention it. If I can't get them to talk to anybody, I want them to take something for their own protection, because I'm big
Mhm.
on critical illness. I've had it a lot of stuff in family and friends and stuff. But like,
Yeah.
yeah,
Well, and I think
smoothly
the
referring it
advisor
off
has to
to.
think about how it could backfire on them if they don't do it. So,
Yeah,
just going back to the piece around, okay, so you've had the conversation around the legacy and the beneficiaries and what do you want to leave to your kids? Ok, and then it's like, okay, yeah, I guess I need to get a will done. Do you know anybody who has one? Oh, no. You're gonna have to figure that out yourself. Okay, so they don't get it done. And then something happens, and now you're left with figuring out probate, like all of that stuff. It comes
so
back
give his
to
opinion on this, and let's touch on the point that you made earlier.
mm,
It's a delicate balance where you don't want to leave your client to the lottery that is Google, right? And you don't want to necessarily stamp your name on anyone that you haven't really vetted and had maybe, a number of years experience with. So then if you're in this awkward place where neither one of those feels super comfortable, where does that leave you? Obviously, it could leave us referring to your course so they can get educated on the types of questions they can ask when they do talk to somebody.
yeah.
But what
Yeah,
else?
it is a delicate balance, but I still think if you can vet a few people, and just maybe not have one, but, you have 3 or 4, here's a couple of lawyers that you may wanna talk to, maybe guide them, here's what you wanna have a conversation about. Here's the part that I think is important that I don't think, people do enough is they refer and then they never ask how it went.
Like,
So if you're gonna refer, make sure you have a feedback loop and say, "Did you talk to them? How did you feel? Did they," because that's gonna give you information on whether you really wanna continue working with this person, or maybe it's a conversation saying, "Can we collaborate a little bit better?" And, uh,
and you can
I think
automate some of that. It doesn't have to be a burden. We can, if you're not somebody that wants to go through the labor of call, you can still have a form that goes out to say, "Hey, I referred you over to whoever, kind of fill out this little what." Like, there's ways to still do these meaningful things and not create
yeah.
a burden we need to be afraid of.
Yeah, yeah. I think that's important. And also I would be very transparent if there are any sort of referral fees involved because the last thing you want is, the client to say, "Oh, you're getting paid and that's where you're sending." Like, again, goes back to the trust. So just be upfront and transparent about that. I think people are pretty reasonable.
Yeah, and I actually have a secret path coming for that down the road because I believe that clients should share in that trusted ecosystem benefit, and that will help independent advisors compete with banks. But that'll be for another day. Yeah, but yeah, let's not hide it in the fine print in the back of like a disclosure document we gave them the thing relationship. Let's just vocalize it because if we're confident and we feel there's value in streamlining that trust,
Then share
we
it.
should be we should
Yeah,
be confident disclosing.
I
Yeah.
agree.
Let's get into a little bit on the finfluencers and all the noise online because that's another silo. And we don't get to collaborate with those silo guys. They just get to freestyle whatever they know. And some of them are good. They give the cute little tidbits on budgeting and stuff like that. But when it gets in, I've seen personally plenty of things where I've been like, ah.
Me too.
So
Here's what yeah, I'll
I
tell
don't
you,
know.
Sheldon, right off the bat, it's what I struggle with 'cause am I an influencer? I mean, I've been
I
labeled
know.
as such.
You are for me on LinkedIn.
What's that?
Sorry. I said you are for me on LinkedIn. So sorry.
Yeah, and yet it feels like an icky word for me. Yes, I influence people to make sure that they're looking at their finances holistically, that they engage with the industry. You can't be financially well unless you're engaging with the industry. And I do get sort of lumped into that category, and I feel icky sometimes. And I'm like, well, wait a minute. And this is probably my ego kicking in. It's like, but I worked in this industry. Like I was an advisor. I did high net worth planning. I've earned my stripes. And some people are like, I'm an influencer and I've read a book. I'm like, okay, we're not in the same category. But again, maybe that's my ego.
Well, no,
And
that's
I
true
admit it.
though.
I admit it.
True.
Mm, yeah.
There's different, kinds of background. And I would say that, some of those backgrounds have certain levels of legitimacy, even
Yeah.
if they don't have credentials. If it's somebody that went broke, self-studied, went through, there's all kinds of different levels. But I think that as long as all of the people are showing care and discretion rather than just trying to get likes and views, a lot of the MLM people selling insurance are trying to become finfluencers just
Yeah.
to make the sale. And, yeah, I mean, if I was just to listen to social media, I'd think I'd have like four different infinite banking programs and the life insurance is the secret to all the wealthiest people in the world, the 1% of the richest, all because they invested in permanent life insurance.
Sheldon,
And
you would be rich if you just cut out those lattes. Come on.
I know. I so like,
You know what? Here's what I will say. I think the positive part around influencers is that they've brought awareness to a topic that no one really would talk about 8 years ago.
that's a fair statement.
Right? Like when I started this, I was doing my research. I was in Hong Kong and I was like, look, listen, I want to do this. I mean, frustrated with the lack of literacy in around the world, really. And no one was really talking about it. There were a few people, but not a lot. And nobody really used the term financial wellness. And I remember thinking like, this is just as important, if not more important than any like physical wellness. And I don't care. Like people can say, oh no, physical wellness is more important. I'm going, really? Because I've never seen a homeless person who's healthy. So don't tell me that. Like money, whether we
And there's a
like
lot
it
of
or not,
stats on it. It's the
it
greatest
is
finance stress is the greatest stress that exists over every other stress. And that
absolutely.
and stress is what causes, I would say, a lot of illnesses and effect on your immune system. So I would agree with you.
Yeah, it breaks down. I mean, it has an impact on your social life, right? Who you're engaging with, everything. So that's the positive part, I think, where people just don't necessarily go to a bank website to find their information, right? So they're going to go to whatever, TikTok and Instagram. So I would say that's the positive part. The negative part is, and you and I have talked about this, it lacks a lot of this information, just lacks context. And it's very difficult. Like you can
It's
talk
good
about
that it's
one little piece
bite-sized.
of information, but people still don't know how to put the pieces together. Um, there's a lot of promises. Like I can't tell you how many times that I've seen someone saying, I can make you rich. And the only thing they know how to teach is budgeting. Okay, I get that's your skill set, You can't make people rich doing that. I've never met a millionaire who, you know, cuts their spending. It doesn't work like that. No, not in today's day and age. Yeah, a lot of promises, a lot of that selling that instant gratification. And I'll tell you this as well. So many people slam the financial industry. Now, you and I've been in it long enough to know there's a lot of problems in the financial industry. I'm not
As
putting it on a pedestal.
any industry, but yes,
But you
definitely.
have to engage with them, and the problem is they're selling this, "Oh, you can do it yourself. You don't need these guys." Like, most of the time you can't. You can if you're starting off and you wanna just, pump money, going back to, investing in a robo-advisor. Who does your tax planning and your estate planning and all that? Like, you kinda need to engage with someone proper. You need a financial plan, and I've
There
yet
are a
to
lot of
see
people
anybody
that
who's been able
teach.
to tackle that well.
You're right. There are a lot of people that teach you can do it on your own.
Yes.
And some of them I even kinda like a little bit because of some of their messaging,
Yeah.
but I feel like I really wish they would be more careful about making broad statements like that.
The
Because
way I approach it in my program is I look at, okay, you might be sort of starting off in this journey. You're not going to have enough money to qualify to even work with an advisor. I get that, you know? Um, and you may
that's a
just
real
say,
thing
look,
to address too.
yeah, and you may say, I have to go to the bank. Fine. But if I teach you enough, that's okay because you kind of know, um, I should be in a TFSA versus an RSP, or you know what, I need this money next year, so I'm not going to put it in an investment, and I'll make sure it's in a money market, right? So you can kind of negotiate with the people you're working with, and still have your needs met. It's when your life gets more complicated, and you do build wealth where you're thinking about retirement. You need a financial plan because I'll tell you, accumulation is hard enough. Decumulation, making sure your money lasts you until you die, along, and you have no idea if you're going to be healthy. You have no idea what the economy is going to be like. Like, there's so many unknowns. You can't do that with a financial plan. Sorry, impossible, right? So this is where I do have a problem with influencers, and unfortunately, I don't know if it's a big problem for advisors. I think for advisors, they may not stand out, in the same way because they're not able to sort of prey on the fear and the emotions because they're regulated, right? But I'd like to think that people who are smart enough, sophisticated enough, they're going to understand the value of advice. They're not going
That's
to.
a really interesting point you just made about how influencers can kind of use that clickbaity stuff in any way they want, where advisors and it's hard for me because sometimes I'm trying to find a path right now after, working at the big bank. Embarrassingly, again, I didn't know any better. I only knew what the bank taught me, being one of the top people in creditor insurance. I will tell you, I sold it more nobly than anyone, though. I never did the assumed sale crap. I treated every client like my grandmother, and I sold it based on trust. However, when I learned that there was independent insurance, I kind of like, cringed and was like, oh, wish I had known that before. And then I'm now at a place where I'm so passionate about protection. I have lots of protection for myself. I don't sell insurance, so I have no benefit from that. But I've had like family experiences, and I chased after one of my relatives for a year. Every month, I just said, just go get the information for critical illness. Critical illness is one of the ones I'm so passionate about because it's one thing
Yeah,
to die, but then when you're alive and you become like expensive and no income, that's for me scarier.
yeah,
And
yeah.
GoFundMe is just not it. So like I'm trying to find that place where I want to share some of my personal stories
But you
and
can.
insight, but without fear mongering. So I'm trying to find the language that doesn't feel to people like that because I don't want to come across that way.
Well, sometimes I know, I struggle with that too, Sheldon. Like, do I wanna be inspiring? But if I'm inspiring and people bury their heads because 'cause they're like, "Oh, everything's great," maybe I need to go to the fear-mongering side, right?
Sometimes I want to
So you
take the
can be
asshole route.
like, you are being authentic, and I feel like I'm authentic. I go, "Here's the reality." I don't want to sugarcoat this. Things are going to happen in your life. And if you're not prepared, it's going to wipe out your savings. Is that fear
And we can't be
mongering?
shocked and not expect it. That's why people get road rage. They get road rage because they left the house and they didn't expect there to be bad drivers. Like we don't
Yeah.
expect there to be emergencies, financial emergencies that are going to put us in a bad spot. So you have to anticipate those and plan for them as though they're fairly likely to happen. Just when and how much is the thing. I had for a small period of time kind of an asshole approach with my buddies that were my age where I'd be like, you just got rims for your truck. You don't have life insurance for your kids.
Yeah.
Do you like your truck more than your kids? Now, I changed that because that didn't really seem to work. I was just trying to like the guy jabs. I'm trying to find that soft landing in just a true authenticity and trying to express it. But
Well, and it's all about risk management. Honestly, all the decisions we make around really anything is what's the likelihood of it happening, right? And they're not thinking that it's going to happen. They're not thinking that they could have an accident or they could get cancer or critical insurance is even mental breakdown, right? But it's something like 1 in 4 will have it.
that's a big number.
It's a big number. It's a big number. So yeah, it is important. But let's, going back to the influencers, I don't know. I mean, we've talked about regulation. It's funny because the CFA Institute has been so concerned about this that they even put out a policy paper on how do we talk about this. I've mentioned it a few times. I think on LinkedIn is can we regulate this? I don't know how you regulate it. I think that's going to be tough. But they do talk about like proactively reaching out to some of these influencers and say, "Hey, did you know when you give this investment advice, it's actually regulated?" I'm sure some of them don't know that. Um, they're talking about whistleblowers and having a database. I think about this and I'm like, is there a way that there could be a committee and if we want to be accredited, you know, to have a little stamp saying, this is someone that you can trust. Maybe that's an option. Could be a slippery slope because then you start getting into fees and yeah, just pay me and I'll
Well, I'm going
approve
to put
you.
you on the
Like
spot.
I don't know what the answer is.
I'm going to put you on the spot with this regulation
Yeah.
because I've been having
Mm,
a trend of giving people all of the power in Canada for a moment in time. I'm going to give that to you now. So you now at this moment in time are the queen of the dominion of the financial industry, all regulators, everything. And you get to make some just based on everything you know today. Take your moment if you need, because we got post production.
okay.
What is just some simple things, one or two things you would put in place to say, okay, we've got a long path to get into the nitty gritty of all the different kinds of regulation, but let's just have these friendly rules, shall we?
Mhm. You have to be very transparent on fees. Number one, I know it's kind of coming. I don't know when it's coming.
No, we're talking about for influencers
Oh,
specifically.
influencers. Okay. Um, so it's a tough one. I think maybe they have to register if they want to call themselves that. Where I think
What they'll register to?
where I think it gets important is if they're being influencers for a financial company.
No, I think most of the time, though they do kind of get their little things here and there. I see them with Amex and whatever, kind of the different things. I think they're mostly doing it for views because the views bring money in all kinds of different ways.
But, I'll give you an example, and I won't name names because people will know these people. Like, I know someone who's been hired by an investment company, and they're like, "I'm a personal finance expert." No, you're not. You're not. You're a TV journalist. You talk about markets. You've never worked in the industry, and it's one little aspect that you're not a personal finance expert.
And no credentials.
None, none. Um, I'll name another bank. I mean, they're actively pursuing influencers, right? And now I'm seeing they're like, you should buy their ETFs. If you don't make 12%. I mean, the stuff that I see this person posting, and I was like, really? Yeah. So there can be regulation around that. Yeah. Whether these banks even understand, the nuances around that, I don't know. A lot of it becomes a cover your butt, right? I worked with one where, again, podcast, they're coming on and they're like, well, my legal team wants to look at everything, all the questions you're going to ask. And I had a beef with that because I'm like, first of all, I'm a journalist. Like, I don't give questions in advance. You got to trust that I'm going to be fair. It was turning too much into sort of a marketing piece. And I said, this is not what I signed up. You can come on as a thought leader and you can trust that I am going to do a good enough job that people will want to go and say invest with you, right? The second you start dictating what is said, it's hands off. But because I was seen as a influencer that they had control over, we started running into this problem. Now, look, Sheldon, other people would not have a problem with this, right? A, they don't know any better. And two, they're like looking at the dollar signs and they're like, whatever, I'll do whatever you want me to do. I can't do that. And I work with a lot of different financial companies. And the one promise that I made to myself was that I need to remain unbiased. Yeah. I probably would make a fortune if I didn't do that, but it's a model that works for me, and it's the model I'm sticking to.
And it's not even easy because I believe that there are people in some of these cult-like followings of something like an infinite banking where there's some people that may be like they're just trying to sell it for the commission regardless of whether it's a fit, because that's kind of how some people in the world roll in all
Mhm.
industries. And again, the issues that are in the financial industry it's just more impact. It's in every industry. There's bad seats and everything, but it's more impactful in ours. And then there's people that really just have drank the juice so hard that they haven't monitored their bias. So just because when you said bias is something you can first choose to try to manage, but then you really have to put in a labor to manage it, because I find myself, going through philosophical debates trying to confront my own bias on a plethora of
We're
issues.
all biased, right? We all have it.
Yeah, yeah.
Yeah. And I recognize that too. And I'm emotional, and some days I'll think this, and another day, I might change my mind.
Self-awareness is the key though, I guess.
Yeah. Yeah. Absolutely. And it's getting that in check, but if you kind of have a North Star, and for me, it is just making sure the women, in my case, it's women, they feel empowered enough that they're going to get their needs met. And they're going to engage, and they're going to value the importance of being financially well and understand the different aspects of, or the different types of solutions. I've done my job. And I just guide them, right? That's why I don't offer products or actual advice. It's
Okay, well,
really educational.
then let's finish on that note and focus on that. I'm going to just highlight a couple finalizing speaking points and then kind of plug you. We do focus as an audience on financial advisors and the professionals, all the ancillary professionals in that advice ecosystem. But there's lots of people on LinkedIn that are consumers of finance that see our clips and our content that go out. So I'll start by saying, I think as professionals, we want to start more meaningfully, more intentionally, because we want clients that are intentional. Intention is
Absolutely.
what makes the world go round other than trust. We need to have intention. Have intention, in the right now about building your collaboration map. Who do you already work with? Who's missing across those disciplines? How can you guys, instead of having the cute little compensation referral relationships, have a more strategic partnership of mutual value? Building trust with whoever the relevant stakeholders are, mostly in our conversation, both partners, not just the higher earner or the person that's the self-proclaimed knowledge holder or whatever else. Normalize that participation in the spouses, and at least intermittently, if you can't get them into every meeting, get them into some of those comprehensive overviews. Copy them on some of those, on some more of those exchanges find out what that inclusion could look like in practical terms. And for all your financial professionals, give Saijal follow, because she's got she's one of the main people I go to on LinkedIn to see what she has to say today. And a lot of the times
Thank
it's
you.
in her field, but just, in the philosophy of life, I feel like it's a voice I can trust. So I recommend professionals. You're going to get smarter at what you do, uh, regardless of what part you're in. If you're following her on LinkedIn, lean into financial literacy and clients. And in relation to that, because the future of advice is really going to be about ecosystems. I think those that are going to be in collaborative are going to take land grabs. Those that aren't being collaborative and are kind of, forget the technology side, but just building more of that in-tune collaboration, those that aren't doing it are going to be wondering what happened to their businesses, and they don't have that business to sell that they thought they were going to have as an exit. But for both consumers, because I'm thinking about me and my wife, you say it's for women, but could my wife buy it and I sit and meaningfully get a good household path out of that?
Yeah.
That's also helping me to have the awareness towards, respecting her, what level of involvement I want her to have.
Yeah,
And
well,
I'll
I'll tell you, a lot of women who are in it ask me that question, "Well, can my husband get involved?" I'm like, "Of course," because how do you create goals if you're
purpose is
not
in,
having
purpose is
that
not expert.
discussion?
Yeah.
Yeah, so I said, "But the difference is you're leading. Like, you're the one who's, taking the course and joining the events, and you're leading, so that's the difference." Sheldon, I want to go back. If I can just say this, you talked about the ecosystem, and I think that is just so important. And when I decided to start the business that I did, which is purely financial education, that's exactly what I was thinking. I was like, I'm just one part of the ecosystem. 'Cause so many people said to me, "Well, why don't you just go back and become an advisor, get your CFP?" I'm my CFA, and I studied the CFP. I just never took the exam at the time because I thought I was going to run money. But and I thought about it, and I said, yeah, but I feel like I have certain skills. Being a journalist, I have a different lens. People come to me like I can talk to a stranger, and they ask me what I do, and all of a sudden, within 5 minutes, they're telling me about their money challenges, right? So I said, there's only kind of one of me. And if I can be that bridge to get women to engage with the industry and make sure they're getting their needs met and getting that financial plan and being a better partner than to you, then why wouldn't I do that? It's just
So then answer this in regards to,
mm,
because I think that there's a lot of utility in what you're offering for all of the professionals. Because again, if let's say I'm an investment advisor, I'm
yeah.
managing 100 million. I've got, let's say 500 households. Um, there's if I'm part of that ecosystem of collaboration could be me saying, okay, I see that you are some clients that would, I don't want to go deep down that road with you. I want to manage investments, but
Which
Ms.
is what
Patel.
they should be doing. They can't be spending all their time doing the education piece. Yeah.
Yeah. So what does your client what would you say to the professionals to say, if I'm saying as the podcast host, you guys not just follow Sejal, but you should be referring her different clients where now you can offload some of that burden and fill gaps for things that you know clients need. What kind of clients would you say is the ideal client they should be referring to you, and
Ideal client, well, we're focusing a lot more
to their
now
core?
on mid-career. Women, but honestly, I've had every walk of life in my program. Like, and that's the beauty of it because it's set up in a way that you got a starting point, you got different resources. I'm walking you through a holistic approach with your money. But typically they're a couple of years into their career. Obviously I have divorced women who are say in their 40s, 50s, and then some widows, but they were probably widowed at an earlier age, so they're not typically in their, like, 70s or anything like that. That's usually who comes in, but they have to be willing to go through the program at the end of the day. All I know is it's a model that I know works because I am working with one of the banks, and when we piloted it, they're like, "Okay, we'll give this a go." And they quickly saw that these women were coming in, they were learning, they were asking me questions. And not because I had to, but because it made sense. I would direct them right back to their advisor and said, here's what you're going to do. You're going to sit down, you're going to make an appointment. Here's the things you're going to talk about. Remember this lesson in this course. This is, yeah, yeah, yeah. Okay. And off they would
So it's not just your course isn't just not a threat.
it's
It's not
not a
just filling a gap. It's probably going to encourage the client to more meaningfully engage with those professionals
well,
that
I'm
they
gonna say it's a threat to advisors who are crappy advisors.
good.
If they're not doing financial planning, if they're not being transparent, if they're being transactional, like we talked about, they might be threatened. But if someone is genuinely knows that they take a holistic approach, then this is very complimentary to them.
Excellent.
Yeah.
Then I will finish up just by concluding kind of that, we can certainly agree that siloed advice doesn't reflect how people actually live, whether they're business owners or at a certain wealth building, accumulating, decumulating, making decisions. Families today are financially and emotionally intertwined, and clients need guidance that reflect that full picture, not just the portfolio. And influencers in AI may offer speed, but they don't necessarily, and I don't see anytime soon that they're going to be offering synergy between that professional collaboration, inclusive planning, relationship based advice. So thank you so much for sharing kind of uh, what you're working on, your vision, your opinions, more of that human future, and you can explore your work at Saijal.com,
.com. Yeah.
Saijelle. We'll put that at the bottom here, of course. And you've got a podcast, Strictly Money. We can find that on all platforms.
Yeah, it's on hiatus, but you can definitely check out, previous episodes. A lot of it is, it's not necessarily timely, so I think people will get value from that.
And then where else can we find you that is, are those the main conduits?
Yeah,
Give her a follow.
obviously, Instagram handle, Sejal, I don't post as often. Typically, as you know, I'm probably more engaged on LinkedIn. But yeah, you can find me
LinkedIn,
there.
the spot on the website and the podcast. So again, we're all working not just for money, but we're exchanging our time for it. So time is the most valuable thing. We're so grateful that you've given us some of yours as your time is highly valuable, Sejal, and really uh, appreciate your thoughts today and look forward
Thank you for
to
having
lots
me.
more listening to you on LinkedIn.
Absolutely. Thanks, Sheldon.
See everyone in the next episode.